Hey, happy Friday afternoon to the Low VA Rates Nation. Thanks for taking time out of your busy day to join us here at Low VA Rates with our Facebook Friday Live post, because it's always Red Friday and we always remember to say thank you for those that are serving. Today we're going to talk about an exciting topic. You know, we're in the month of April now, and that day of April 15th, well, this year it's April 16th to pay our federal income taxes. So we're actually going to talk about how to cut some taxes for the veteran community. And this topic pertains to those that are disabled veterans. Those, when we left the military, you got to do that great medical exam as you came out. If you received a disability rating for either for service-connected disabilities, you may have a huge tax benefit that's laying out there that you don't know about. So we're going to start with the numbers part of it. So when we look at our numbers for today, let's say we've got a house. Remember, they never let me draw pictures of houses all the time. So we've got our happy house over here, got a window. Heck, let's make it with 2 windows. Probably ought to have a door. Okay, great, got a door too. So if your house is worth $300,000, and a lot of states, almost every state in the country right now has a tax exemption platform for disabled veterans. Now, the amount of that benefit is going to vary on your disability rating. We all know that 10% is the lowest disability rating for veterans, and 100% is the highest. And a lot of these tax prorations are based on your percentage of disability. But what they will say is the state or the county, they will say that there is we're going to call it disabled vet tax benefit, is they'll exclude a portion of the value of your home for taxation. So in this example, let's say that disabled veteran tax benefit based on the specific disability rating, it would allow you to exempt $200,000 of value from your property taxes when that annual tax bill comes up. So this would mean that you're only going to receive a property tax bill based on $100,000 of value. Now remember, the tax assessed value, it is close to the appraised value of your property, but it is not 100% the same thing. Your house could be taxed at $300,000 and it might be worth $350,000 or $325,000 depending on where you're living in the country. So we've got $100,000 of tax liability, and let's say that your state income tax rate is 3%. That means your tax liability would be $3,000 on an annual basis. That's still a lot of property taxes. Remember, this is for illustration purposes only today. But if you were not a benefit of that disabled veteran tax benefit, think about this. You would be paying $9,000 on your annual property taxes. That's a lot of money. That's $6,000 of annual savings. If you break it down, the other one, $500 a month that a veteran and their family could add into their budget. Now that's pretty exciting, because when you think about it, the General Accounting Office, aka Mrs. Lewis in this example, that's a significant amount of extra income for extracurricular activities, I would say, that you could allot. You can take a lot of family vacations or do other things, pay for kids' colleges, different things like that. So this is the numbers. You can see how that benefit is. I encourage everyone, if you want to dig into this more, if you go to your countyassessor.gov site. So if you're here in Utah, if you went to saltlakecounty.gov under the county assessor's office, there is usually a link for your disabled veteran tax benefit. Now we've done the numbers part of it. The next thing that we want to talk about today is the documentation, because you know, when you're dealing with Uncle Sugar or the county government, you always have to have some documents to go down there. So one of the things you're going to have to take down is your driver's license to make sure you are who you say you are. you're also going to have to take down your proof of VA disability. Remember, each year or when you first get awarded your VA disability, the Department of Veterans Affairs sends you like a 4 or 5 page document that says, here's your disability rating. The other one, you're going to have to take down your DD 214 for a character of service. If you are a member of the National Guard, that's going to be an NGB form 22. If you're a member of the Reserve Component Systems, that is going to be a 256-R. That will show that your driver's license, it'll have your ID on it, also have your home of record, proof of VA disability, your DD 214, your proof of service, and the other one would be the warranty deed for your home that actually shows that you are entitled to that address. So that's a quick example of how to use those disability benefits to maybe get some tax relief for you and your family. Always a benefit that we have with the veterans. So thanks for joining us on Friday afternoon. But before I go, I've got to have a shout out. Today, or this week, was a difficult week. We lost 4 Marines that were killed in a helicopter crash in the southern United States. And just on Wednesday, we lost a F-16 pilot out of Nellis Air Force Base. Thank you to the low VA wage community and all veterans for raising your right hand and serving proudly. Please stay safe.